Let's go and get started for the poll report. We know that Wall Street's closed today, but there's still some Forex trading and crypto trading to take a look at and just review how everything's going for the week. So let me make sure everything's coming through loud and clear. Type in a wire yes for me, and I'll kick things off with a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, Forex, cryptos, you know the deal. All right. BT, what's up, my man? Good to see you. Russ, good morning. Chris, good morning. Herbert, good morning. Wayne, good morning. Mark, Joyous, good morning. Nice to see everybody. All right, here we go. So we're going to take a look at the sector tracker for major sectors, all 11, the last 5 days. So expirations yesterday, if you're trading options, a big one. We came into equities on demand this week with over 20 expirations and managed to do pretty well. I actually have a chart or a picture on my phone of the assignments I'd like to take a look at. It doesn't seem like there was a lot, but I'm going to take a look. So I did lose the stock CTRA for $6 a share, which was excellent. I took a small loss on Uber for 25 cents. I was assigned some shares on DBB, which I'm actually totally happy with because I'm looking to take that up to 30 bucks to at least flip that for $4.50, $5 a share. Took some shares on Credit Suisse at $7.50. WEAT took a small assignment on that one. Another one I'm looking to run for probably $5+ a share. And then also took an assignment on BKR, looking for that one to continue to run for $5+ a share. So we've had some good flips here in the last month or two. And a lot of what we've been trading has been, my MO has been the end of last year since we had that kind of deleveraging signal in November of last year, getting into energy, getting into materials, trading assets and inflation-friendly stocks. And we've been doing really well with that and actually having profits almost every week. So it's been a good run. We're still running. I think that, inflation numbers aren't stopping really. We saw the highest, I think, 12-month stretch in inflation in the U.S. since 1981. And again, it's not a demand issue, it's a supply issue. We have more stuff going on. I read this week about U.S. and Mexico, like 4 times the wait times now, and perishable goods and chips and semiconductors and other stuff has just been delayed like crazy at borders. And it's just within North America, let alone the globe. So it's probably going to be 12 months to resolve, 24 months to resolve, and it might be at the point where there's price crisis in order to force the tech and innovation to, give solutions. So it could be food related, it could be energy related, it could be supply chain related, but these bottlenecks are going to take time to work out. So in the interim, there are certainly stocks we can trade and be profitable with, and that's what we're doing. Morning, Scott. Morning, Greg. Denise, good morning. Donna, thank you very much. Nice to see you. All right, so let's jump in. So we have some currency trading this morning, currency strength chart. Not super volatile, but again, seeing a little weakening in the yen. I did warn yesterday in Flex that we might be seeing some type of flash crash move in the yen crosses in case things get really dicey. So far, that hasn't been the case. I did end up modifying my trade on the CAD yen. We were looking at a sell stop around 99. I'm going to bump that up to now 99.45. So I'm looking at a sell stop 99.45 right here. Looking for sell stop. I just want that chart alarm to activate. And all I'm really looking for is, we're potentially stretching into some overbought conditions once again. You can see the price with momentum disagreement. So price is making a slightly higher high. We have momentum that is fairly obviously disagreeing, also at crazy overbought conditions with the daily time frame. So one of my favorite technical alignments, this is how I like to find trades to get ready to sell some highs. And rather than calling the top and having this thing blow through this level like a flash crash move would do, typically in the direction of the trend, I'm just looking at setting a sell stop. If price confirms the move back down, guess what we have? We have a pivot, 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 3 in a row, plus we have a monthly pivot cluster. Anywhere between 96 and 9,700 would be an excellent spot to take some profit. Conservatively, that is 95.75 up to around 9. We'll just say 95. We'll just say this 96 to 9,700. If you get profits back into that window by selling it near 99.50, that's a nice little 200 pip move without much risk. So, because I would imagine if we get filled on that, we're putting in a pretty solid top, or should be. So I'd expect price and probability to head lower, and we can at least grab some pips there. So bumping up my trade on CAD yen. And again, staying patient on a bunch of other yen crosses. The Euro Swiss had a nice recovery this week. So from the recent lows around 1.01, we had a high around 1.02. It still hasn't broken any recent highs. We tested those highs around 102, but we haven't broken anything. We still have a weekly pivot right around 102.65. Of course, I'm wondering if this is a big bottom that's going to be forming here on the backside of the trend line, maybe even a double bottom at 1.00 or parity. And we're looking to see if we can come back to this yearly pivot at 106. Hopefully, cementing the lows and not looking back. And then we're talking in 6 to 12 months' time. All of us are having this amazing conversation and probably a party, because if we get up to 109, I'm going to love it. So that'll be fun if we get there. I did take some profit on dollar Swiss yesterday. Dollar Swiss yesterday had a nice little run. I was tracking it on the 1 minute chart, had a bunch of chart alarms going off, ended up taking profit around 93.25. Here is my signal service. Ended up closing up some trades. Where is that at? Here we go. So right here. Dollar Swiss, 114 pips on one position, 194 pips on another position. And I also had some other accounts, other trades closing from those stacked orders that were built off of this. So I had some buy stop orders in here. I had some pullback orders in here. I had 12 positions running. I ended up taking profit at 94.25 yesterday. So we had a high around 94.20 or 94.50 again, just shy of that level. Obviously, I want to still see this breakout, but at this point, after taking some profit yesterday, I kind of hope that we pause, we pull back down, we find this pocket, we maybe even reset again, and we buy low, we buy low, we buy low, and we just keep grinding this dollar Swiss like we have been for the last 6 months. Dollar Swiss, buy the dips, CAD Swiss, buy the dips. Aussie Swiss, New Zealand Swiss, if they pull back, I'm looking to buy the dips. So Euro Swiss, if we hold that low at 1.00, I'd love to stay firm on that one. Swiss yen, if it ends up dipping and going lower. So again, my Swiss basket analysis doesn't change. It's just what's going to be the difference maker to let that thing run loose a little bit and hopefully see it follow through. Okay, so good looking divergence on some of these yen crosses. It's probably going to be an overall quiet day with limited volume. I was, wanting to do today's sessions. We're still doing an equities on demand session at 10 o'clock. Just to review, I posted notes yesterday in class, or after class rather, to review what we're going into next week. So we have more covered calls to look at, more expirations for 422, and some other stocks to take a look at. So I got a little watch list together as well on stocks we're going to keep looking to trade and just working. All right. Anything on the crypto side? I saw we're sitting at like 41K for Bitcoin. So not a stellar week. Overall market cap, I believe, is back down below 2 million. Or 2 trillion rather. 2 million. Yeah, 1.87 trillion. And over the last 7 days, we've had pretty awful performance. 7.18% on Bitcoin, 6.88 on Ethereum. Any other ones that stick out? Ripple actually holding steady at 1%. We're trading around 80 cents. Solana's down 12%. Cardano's down 11%. Terra Luna, which was at new highs just a couple weeks ago, down 17%. So, off those highs. Avalanche down 11%. So all in all, not a great week in crypto. We gave back about $300 billion in market cap, because I think not too long ago we were at 2.1. Let's check this out. Let me zoom in. So let's go year to date. What was this recent high? So this is back early April. We were up to 2.17 trillion in market cap, and we've been giving it back a little bit. So we're still watching, still waiting. Has any major structure changed on this? No. But the way I was analyzing this is watch for these potential resistance levels. We have resistance, we have resistance, we have resistance. It is holding. We have some potential support sitting here around 38,000. So if we see another bounce, if we see a bounce off of 38,000 back up into this range, there is a weekly pivot available. There's also a midpoint of this channel, and we'll see if we go back to these highs and score a point for the bulls around 50K. It is a little concerning if we do end up breaking below 38,000. I'd say we're vulnerable to the downside, but there is certainly a lot of support around 30,000. So we could break these lows, maybe have a little bit of a bear trap, and then we'll see if the bulls, again, for the optimistic enthusiasts out there, see if the bulls are going to come ripping back here around 30K and push this thing back up. If we cement some lows, then we can really start to get this thing going. But again, I say stay patient with crypto right now. I'm not getting too heavy on this. I'm just going to let this play out and be very patient. It might take time for this base and this low to officially be in. So that's what I'm looking for. But we'll keep watching. Okay, Randy, good morning. David, good morning. Yes. All right. Any requests? I'd like to take a look at dollar index, gold, silver. Dollar index continues to hold pretty firm. Dollar Swiss had a nice run yesterday, took some profit. There is still some room for this dollar index to run. So dollar index could run up here to these multi-year highs. We're talking 2015, 16, 2020. If we hit those levels, I am looking for some highs to form and the dollar start giving things back. All right. I don't think the Fed is going to surprise the market with higher than what's already been forecasted. They can come out and say we're going to raise 50 basis points, 50 basis points, but I don't think they're going to go 50, 50, 50, 50, 50, and all of a sudden the Fed rate's going to be at like 3, 4%. I don't think that's going to be the play. This isn't, 1980 something where it's like you raise rates to 20% to squash inflation. I think the Fed is very cautious because if we raise rates too quickly to shock the market, guess what comes with it? We might bring inflation down, but we might bring the entire stock market down with it. And even though the stock market's not truly a sign and reflection of the real economy, it certainly seems to be played that way in the markets, and the sentiment seems to act that way. So I think the Fed is doing everything it can to tell the market exactly what it's going to do, telegraphing the rate hikes this year, even if the Fed is sitting at 1.75 to 2% by the end of the year. That's why I think we get this thing priced in near these multi-year highs, and then we buy the rumor, sell the fact. Fact of the matter is the Fed's going to raise rates to a certain extent, and then we start to decrease over that as other central banks start to do the same thing, start to raise rates. ECB is another one. ECB is looking to raise rates later this year. When? I don't know. Their borrowing rates are still negative. Their official cash rate is still 0%, but the market's anticipating that the ECB is going to be at 0.7 by the end of the year. Out of essentially nowhere. I haven't seen any signs of a stronger euro. Everything going on with Eastern Europe and Russia, Ukraine has been plaguing the euro for the most part. The Swiss has been somewhat stable, but still kind of vulnerable. But RBA strong because of commodities. RBA has not had to touch rates. RBNZ raised rates to 1.5%, but they got crushed right on that news, which is kind of wild and crazy. BOC, Bank of Canada, raised rates 50 basis points. They're at 1%. So look. What's going to be exciting as a Forex trader is over the next maybe 12 to 24 months, and I don't know if this is going to be a thing or not. I certainly hope that it could be. We had this conversation around carry trades. And in a low volatility environment and lots of liquidity like the Forex market, if it's low volatility, I would expect carry to be king. So right now I've been saying cash is king because you like to have dry powder and margin to trade, everything on sale or on discounts, trade, beat up sectors and things that are heavily discounted. But in Forex or in currencies, carry is king. And that means all these major, G20 countries that have yield, it's interesting that I would like to hold like the Kiwi versus the Swiss and hold it long. Even if we have dips, dollar cost to average in, space it out every 100 pips and see if the long run is you still get paid in pips because we'll eventually have some bullish movement, but we also get paid a positive rollover. And again, things have changed a lot since 2015. I don't know what the rates would have to be. I'll certainly reach out to, the brokers that I work with to figure out, hey, is there a cutoff point where the rates have to be a certain differential in order for us as traders to hold and actually get paid? I don't know. Maybe it has to be 3+% to get any type of even zero swap, right? Rather than getting a financing charge every day, I'm curious if I could get a positive rollover. If I could, I'm certainly worth holding that direction for, the next 12 months, 24 months to see, look, I can hold this position, doesn't cost me anything. And I think give it time. I'd rather be on the winning side of carry. I'd rather be on the winning side of where these central banks are going with their rates. So not a lot has changed as far as the majors. The G7, for example, Australia, like I said, didn't raise rates. They're not raising rates yet. It's discussed maybe raising rates in September. Bank of Canada has raised rates now. They just did it this week. They're up to 1%. Eurozone, talking about raising rates, haven't done it yet. Bank of England has raised rates a couple of times. They are sitting at, United Kingdom's at 0.75. So again, they're actually quite a bit ahead of the U.S. New Zealand has been raising rates. The New Zealand dollar, I said New Zealand dollar, they raised rates 1.5%. U.S. raised rates once. And yes, they're going to raise rates probably again in May and again in June. We talked about that this week. If you look at this Fed Watch tool, the market's already looking at pricing in a 50 basis points hike. This is for May's rate decision, May 4th. May the 4th be with the Fed. 91% probability that they're going to raise 50 basis points in May. This one hasn't changed nearly as much as what we saw back in March when it was back and forth 50-50. Nobody knew what the Fed's going to do. But this looks pretty much priced in. Also in June, expecting another 50 basis points hike right here. 70% probability, just shy of that. So it'd be 50 basis points, 50 basis points. That would put the Fed up to around 1.5 to like 1.25 to 1.5. And then we could either pause the rate cycle moving forward, which would actually be seen pretty dovish, or we can continue with those 25 basis points increases through the next 3-4 months and see how that takes us to the end of the year. But the expectation would be the Fed's going to sit around 1.75 to 2% by the end of the year. And I'm sure that their fingers are crossed, just like everybody else, that it helps pause or bring down inflation. Okay, inflation is ridiculous. Um, Everything that's, and what's funny is energy and food is not configured in what you're reading for inflation numbers. And energy and food is some of the most expensive stuff. Used cars up 35%. This last report, they were down 3% of that 35%. Still super expensive. Airfare up 15 to 20%. People still want to travel. A good stock this week. Delta Airlines had great earnings. Looking at travel numbers picking up, TSA screenings, all that good stuff. We had a nice little jump. We've been long on Delta since this dip around $32, and it's up to $42. So we're enjoying this. I'm trying to get the stock called away at 37, which I'm very likely to have happen, but I'm going to keep rolling this call out if I can. If price keeps increasing, $44, $45, I'll either keep that 37 call and roll it to get more premium to lose it, and that way it's way below the strike prices, or way above the stock, way below the stock price, or I end up losing it at $37, and I've drilled my cost down to below 30 bucks. So I can turn that to a nice little profit here, hopefully in the next couple weeks. Okay. Juwan said, product carry, we can buy the higher rate and sell the lower one. That is correct. So as an example, right now, one of the biggest differentials in the market would be New Zealand Swiss. Okay. So of the majors that we trade, New Zealand Swiss would be one of the largest carry opportunities. Now, like I said, this will depend on your broker and depend on their intermarket liquidity providers. I don't know if I'm going to have a positive carry if I take this trade. If I'm long New Zealand Swiss right now, I don't know if this is a positive carry trade day to day. You would have to check your financing to see. Now, I have enough open positions that even me buying the New Zealand Swiss does not necessarily mean that I'm going to be getting positive rollover as a net result. I might have positive rollover or zero swap on this one trade, but because I have other open positions, I might still be paying, but could maybe reduce the amount that I'm paying every single day on my open positions. But right now, this is one of the largest differentials. And so, like I said, if we give this time, maybe the next 6 to 12 months, see where these central banks are at, then we'll see where the carry trade is at. This takes me back to the good old days of 2013, 2014, when I probably made $10,000 holding the New Zealand dollar long. Now, the good part was I was holding it long. The bad part was I was losing my butt in pips. New Zealand dollar back in 2014 and 15, when the dollar started to get super, super strong, I was holding one of the dumbest trades. It was right over here. This is 2014, and they started to switch in August. So as this was dropping, now granted, I waited a little bit. This is what I was trading. I'll walk you right through it. So you see how fast this dropped. We had this massive double top. We had this excellent trend line break, and I had the right intention. But again, me trading, 8 years ago now is a lot different than me trading now. My intention was, all right, hey, we had this nice pull, we had this nice drop to the downside. We're breaking all the structure. What I'll try to do is buy here for a little bit of a retracement, and then I'll try to sell it. Okay? In theory, makes sense. In reality, I didn't get the pullback that I wanted. So I had like pivots back here and equilibrium and Fibonacci levels. None of those got hit. So instead, I'm buying this thing off this low, and then I just held it. And I bought some more here, and I bought some more here, and I had to wait for this to be a crown pattern, and then I ended up getting my money back. So this entire trade from 2014 to 15, this was August, September, October. We go into the new trading year. I held this thing for a long, long, long time, longer than I wanted. But like I said, I ended up making net profit on the result in addition to having positive rollover for like a 6-month period. So it all worked out, but I felt like an idiot the whole time I was taking the trade. So if I'm going to line it up now, the difference is let's find a trade that could pay us in pips and pay us in rollover, not the other way around. I don't want to see the price going dramatically against me, and I'm like, oh, I got positive swap. Who cares? Positive swap will fail in comparison to what you're holding in a drawdown, depending on your trade size, of course. Okay? So that's all I'm saying. But we'll watch. And like I said, I will be in contact with the brokers that I work with to see, is there something are they paying positive swap right now? If so, is it on those major differentials? So I will actually reach out to 8cap or reach out to my friends at Forest Park FX and see what they have, if they can, test the waters and check with other brokers between 8cap, Pepperstone, IG, Oanda, Forex.com, or Gain Capital. If any of those brokers are paying positive rollover, I would like to know. Okay. Is New Zealand Swiss best rollover? That's what I just said, Jason. Yep. So based on the majors right now, and like I said, I don't know if brokers are paying positive roller for this. I don't know. All right. So it should be, in theory, yes. The 1.5% that the New Zealand is at and the negative 0.75 that the Swiss is at, that's your largest differential right now of the majors. Now, you could also talk about, well, I'll trade the Turkish lira versus the Swiss, a 14% interest rate. That might be an instrument that's untradeable or super low liquidity. I wouldn't even play with that. That's like playing with fire. Okay, so stick to the G7, stick to the majors and crosses there: the Aussie, the CAD, the Swiss, the Euro, the Pound, the Yen, the New Zealand, the dollar. Stick to those 8 currencies and how those crosses. That's how we get 28 majors and crosses. Okay, all right, cool. Thanks, Jason. Yeah, instantly hit that button. Perfect. Hit that thumbs up button for me. All right. Anything else? Little conversation on that today. Equities on demand at the top of the hour. We don't have to sit here and make up stuff. It's like it's been an interesting week. It's been a good week. I ended up making some pips this week. Closed out for about 550 pips in pound Swiss and dollar Swiss. We're running with Aussie New Zealand long. We have a Euro New Zealand long position as well. Closed up some pips really quickly on Aussie Swiss. Took some profit. New Zealand CAD took some profit. And then in the stock side, a lot of expirations, like I said, but we managed to do pretty well. Let me see if I can bring the notes up here. So we had some closed trades. We took some assignments, like I said. We have some closed trades for profit. We did really well in some of those energy plays, and I'm actually excited about what we did get assigned. Only a few assignments this week out of like 20 some expirations, but we ended up losing a couple of stocks, which is good. CTRA we lost for like $6 a share. The other one I was close on was Kraft Heinz, KHC, closed at 42.30 yesterday, 42.29, and I had a covered call at 42.50. So what I ended up doing was closing that covered call for a cent debit. So I collected like 50 cents on the covered call, closed it out for 49 cents, and then I put in another covered call at 42.50. So I'm trying to cover it the same way. If it gets up to 42.50 plus, I lose it, end up lowering my cost on all my shares for another like 30 to 40 cents. I can see what that was actually trading for yesterday. So let me go to the break even calculator. I think it was another like 40 to 45 cents. I'll confirm that. But that was a pretty good one. And then we have a whole list I put together yesterday in Telegram for equities on demand. This is going to be what we tackle next week. So class next week, these are all the stocks we're going to be looking at. Some covered calls, some credit spreads we'll be managing. And if we find any other good trades, we'll take them. So it's going to be another busy week, but not nearly as management consuming like it was this week to close out some trades early, try to avoid some of those assignments. But we did a pretty good job collecting most of the profit. If we have a credit spread that we got paid 50 cents on, we collected 45 plus cents on it and closed it out early to avoid assignment on Thursday. So anyway, it was a good week overall. Let me see Kraft Heinz really quickly. Also, another stock that I'm very close to losing in a good way is United States Steel. I have a $39 call out to next Friday. So this is another one that if I lose it, I've drilled the cost down to about $32. That was after being long here from $20. I was long from 20, took profit at 30, got back in at 30 plus, drilled my cost down a little bit, looking to lose it now around 39. So overall, I mean, this entire run, if I lose a stock at 39 plus, I'm still bullish on some credit spreads all the way up to 45. But CLF and X have been awesome stocks for us in equities on demand. Kraft Heinz, let's see here. Where are you? Alphabetical order, probably. Here it is. Collected an extra 33 cents on that cover call for the expiration is next Friday, so the 22nd. Good stuff. All right, so that's X, CLF, right up here in the 30s. CAG is another one that I'm liking. ConAgra up to 35 and change. I'm still holding ConAgra. I think I have a covered call. Let me check. CAG. Okay. Yep. Cover call out to 30. I did one at like 35.50 out the next week. So we'll see how that plays out on the 22nd. Coinbase, another one that I'm holding for a little bit. Coinbase, I mean, I don't know why Coinbase is down to fresh lows considering Bitcoin has not been down to fresh lows. I'm going to see if there's any earnings coming up on Coinbase. Hopefully it's still later this month or in May. I'd like to see some positive upticks in Coinbase to get back above 200 bucks. May 12th. So we'll see what that looks like and what overall cryptos look like. But that's one I've been sitting on for a while. I've lowered the cost quite a bit. OKT is another one, lowered the cost quite a bit, but still needs some price to do some pretty solid recoveries. ARKK, another big one with tech, down to $59. I don't mind owning the stock. but the ownership would be down here towards 50 plus, like low 50s. If we can own this thing low 50s, I think this has plenty of upside to get to 90 bucks. So it's going to be one of those kind of broader tech-based recoveries. It might be short-lived. It's certainly, I'm not planning on tech in general returning to these 2021 highs, not even close. But even having just a broad recovery, whether that's something that happens post summer, I don't know. I mean, there's that sell may go away. We might have a vulnerable Q2. If things don't shape up better on the SPY, we just have, I mean, the market is essentially pricing in a lot of bearish sentiment. We still have Russia, Ukraine. The market's pricing in everything with supply chain issues like it is recession worthy. We have inverted yield curve. We've got Fed raising rates and tightening cycles. But there's still a lot of fundamentals that are suggesting that, we're going to be okay. I think this is like, I think we struggle to take out the highs, okay? But I think we also struggle to take out the lows. I keep saying this. This to me, it feels an awful lot like 2015, where the market's not ready to just full on implode yet, but we're still, slow to justify like the broad bullishness. I think the bull market is over. I think this is a trader's market. I've been saying that for the last 12 months. Cautiously bullish. Pick the right sectors. And, Forex is the same way. We have to pick the right currencies. I'm favoring Aussie and New Zealand and CAD, trying to favor commodities because I feel like that's still going to be the best looking play, the stickiest play over the next maybe 6 months. It's just looking at overall dollar weakness and commodity strength. Okay. So anyway, that's it. Any questions, any requests for today? A few more minutes. I mean, we don't have to sit here forever. It's Forex today. It's cryptos today. Stock market's closed. I'm kind of glad that it is. I'm happy it's Friday. Got a busy day. We got class at 10 o'clock with Equities on Demand, short session. We'll just review the notes from yesterday. And then I've got a couple classes for my Pockets Pattern Pro today that I'm really excited about. And hopefully traders are excited as well to dive into that. So great strategy. Help traders with the robot, getting it set up. And looking forward to teaching strategy 1 today. Okay, if there are no requests for today, it is Friday. We'll come back next week. Business as usual next week on Monday and Friday for the weekly outlook. Aussie Yen, Sharon, sure, we'll take a look at that. So next Monday and Friday, I'll be here 9 o'clock, YouTube session, Monday, Friday, live. One thing I do want to note really quickly, I have not said this enough. Okay, I haven't said this enough during my live sessions, but please, 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 anybody that is following me, anybody that is watching these live sessions, anybody that's following me anywhere else on social media, please, my gosh, do not take any false handles or bios or profiles. If it's not real Chris Pulver, all right, it's not me. I don't care if it's real Chris Pulver 1, real Chris Pulver 01, real Chris Pulver, the real Chris Pulver. Look, these are my handles right here. If you don't see this and it's not posting content and it's certainly asking for crap, it's not me. So please, 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 and thank you. Any type of that scamming, phony nonsense, it's been happening a lot on Instagram. I've probably had 100 plus emails and messages the last month. Chris, is this you? Is this you? It's like, no. Number one, my handle hasn't changed in years. Number two, I'm never going to ask you anything directly. If you want to reach out to me and message me, I will reply. I'm never going to ask you directly. I'm never going to solicit, out of nowhere and have some too good to be true bullshit, scam. So please block, unfollow, report all that stuff to all those, scammers out there that continue to just be relentless. It drives me crazy, but there's very little I can do other than keep reporting it, keep tagging it, trying to throw it out there to the algorithm to finally take something like that down. But please just know I'm never contacting you. You want to contact me, I'll reply. These are my handles. They haven't changed. That's it. Right? But your help is appreciated. I mean, the more you can find them and block them, report them, that helps get that crap taken down. But I just hate to see that, people out there are, number one, doing that. It's super annoying. But also traders and followers that are really thinking it's me is crazy. It's not me. So this is the real stuff. Okay? All right, Sharon, let's do Aussie Yen for you, and then we'll get out of here for today. Aussie Yen. So, by the way, on this weekly time frame, this thing is so crazy. So, Aussie Yen 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks in a row. I would think that 11 weeks in a row is probably cause for a top to be forming relatively soon. Now, I say top, I'm not saying full on correction or reversal. I am saying some type of wave cycle, some type of correction. So all I've done here is drag a fib literally from this low to high. In addition to that, we talked about this the last couple of weeks in Flex to kind of keep our wits about us. If you look at this from a wave count cycle, COVID recovery, wave 1, wave 2, wave 3, wave 4, wave 5. By the way, this is one of the most aggressive and kind of nonsensical wave 5s I've seen in a long, long time. And of course, it makes perfect sense to be on the Japanese yen because this is the crap that they do every now and then. Once in a blue moon, the Japanese yen decides to move like no other currency pair. So 11 straight weeks of bullishness. We're up here on a fifth wave move. This means we should have an A, B, C correction. Now, I see this coming back into past resistance here. Okay, we have tons of pockets as well back to 8,600. So what I'm looking for in Aussie yen is an opportunity to short it, but again, not trying to be super aggressive. All right. What I could envision right here, what I'm looking at is watch these recent lows. You can see lots of divergence here with price making highs up here. We haven't quite poked those highs yet, but I could see that happening. But disagreement, we're overbought. So what I'm looking for is a sell stop right around here, around 92. Maybe we can bump this up. It's trading at 93.60. We could bump that up to like 92.50. And the plan would be, if we get filled on that, to take this back down into this lovely pivot cluster. That's a conservative profit target, but I think we can get there. Okay? So the reason I don't want to jump in and sell it high is in case we blow through these levels, then we have the big retreat. But I do think if you keep your eyes on this pocket area, you keep your eyes on these pivot clusters, price will end up falling back to them. Okay? So be patient, but I do think that it is coming, right? So we have 1, 2 pivots in a row, monthly pivot in between. This entire area, the way I see it, on the chart, just on price, that whole area is a beautiful inefficiency. So when it's ready, maybe it takes this structure. But when it's ready, I think we end up coming back down to those areas. So what I'm trying to do is, if I have my break even at a point where this is profit, I'm going to go ahead and close out and take profit. If I have my break even to a point where maybe my break even's like right here, if I don't get to break even, I might still close out and mitigate a lot of the risk and close this thing out with a very small loss, versus sitting here like, oh, I'm going to panic and close out at the top. Like, I don't want to do that. I do think that you give this some time, the technicals will behave, we'll get a wave cycle, we'll get an ABC correction, and I'm trying to play it that way. So if I can add a little bit more, I might have some stacked orders to the downside, but my goal is to be pulling my break even up a little bit higher, taking some profit in this conservative pivot level, and see if we can, get out of this trade without any trouble. Okay, but a lot of weekly candles in a row, crazy overextended, overbought with divergence, fifth wave move. I keep telling traders this. If I look at it objectively, I don't care that I'm in trades on the Aussie yen right now. I look at it objectively like I have zero interest in the trades. Guess what? I'd still be looking to sell it. But I know it's a Japanese yen pair, and in my experience, confirmation is a huge difference maker to avoid the stress and the nonsense that happens every now and then. So that's why I'm looking at sell stop orders versus pending sells of these highs. This could blow these highs off and make every trader upset with another 100 pips to the upside, another 200 pips to the upside, maybe a flash crash. I don't know. I don't want that to happen, obviously. But if it does, don't say we didn't talk about it. Okay? So sell stops, I think, will be good. Look for some confirmation, and we'll keep talking about it through Flex over the next couple of weeks. Cool? All right. Good stuff. Okay. I'm going to wrap it up. I'll take a little breather before class at 10 o'clock with Equities on Demand. And see you next week, Monday and Friday, for the Pulver Report, for live sessions on YouTube. Again, if you're following me out there on social media, please know, follow the real stuff. Anybody that's direct message you, it's not me, right? To report that stuff, please. That helps me a lot because I feel really bad when everyone's messaging me, and I've got, educational specialists and people I work with message me like, hey, is it? No, it's not me. It's pretty simple. If it looks phony, it's not me, right? So anyway. All right, traders, I'd appreciate it. For those watching today, if you hit that thumbs up button for me, help the YouTube algorithm support the channel. And if you're watching this as recording after the fact, have a great Friday. Have a great weekend. I'll see you next week. Thanks, everybody. Bye.